Go. Hello, folks. This is Howard Reitzel with Reitzel and Company with your April 2015 financial update. And in this month's video, we will talk about some of the major economic headlines from last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for the required disclosure statement. First quarter earnings season kicked off in April as United States firms reported on their performance in the first 3 months of the year. So far, the news is mixed. Out of the 280 S&P 500 firms, overall profits were up a respectable 9.1%. However, top-line revenue was flat and many firms missed their revenue targets. These results indicate that United States firms struggled with weak demand and the earnings came from carefully controlling costs rather than organic growth. The revenue misses were especially stark among firms that depend on global sales. The strong dollar has hurt conversion rates into dollars and made it more expensive to buy U.S. products. Volatile oil prices and soft global growth also affected many firms. On the positive side, firms were able to squeeze out some respectable profits. We also got our first look at quarter one economic growth. The advanced estimate for gross domestic product showed that the economy basically ground to a halt in the first quarter, growing only 0.2%. Though this early report is based on incomplete data, we can see that exports plunged, businesses slashed investments, and consumers held on their wallets for dear life. How much of this weakness is still with us in the second quarter? That's the big question that economists need to answer. So far, we know that consumer spending edged upward in March and that wages increased in the first quarter, giving Americans more money to spend. That the wages increased in the first quarter. Hopefully, a warmer spring and summer will give consumer spending and business activity a boost. Last month, Federal Reserve Open Market Committee meeting was also a major event. Investors watched the meeting closely to see if the Fed would offer any more guidance about future interest rate hikes. Instead, the Fed completely removed all calendar references from official statements, indicating that a mid-June rise is very unlikely. The takeaway for investors is that the Fed is being very sensitive to the economy and to the financial markets and isn't ready to commit to interest rate hikes yet. This is good news because it shows that the Fed is being very cautious and won't make any sudden moves. In the weeks ahead, investors will be thinking hard about whether the first quarter weaknesses continue into the second quarter. While some of that can be attributed to the season of winter, the factors that have faded with warmer weather, currency issues, and oil price volatility may still be with us. As always, we're keeping a close eye on the economic environment and we'll let you know when the circumstances warrant any changes. That's all for the April financial update. As always, if you have any questions or concerns about what we've discussed, please give our office a call. Once again, this is Howard Reitzel with Reitzel and Company signing off for the month of April 2015. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 812-500-0263. We're happy to talk with you. Thank you.